Bienvenidos de nuevo a Oportunidades en Grecia, el podcast en el que tratamos de acercar las oportunidades que en el marco de la internacionalización, de la exportación, la inversión y la captación de financiación, el país presenta para la empresa española. Welcome again to Oportunidades en Grecia, the podcast where we try to get business opportunities regarding exports and investments in the country, Greece, closer to Spanish companies. Today, we go back to the investment opportunities and understanding the latest bets in the country to attract investors. The Hellenic Innovation and Infrastructure Fund will help doing so. The HIIF, Greece's new sovereign investment platform and growth fund's new investment arm, created with a seed capital of 300 million euros, has been designed to mobilize private capital into strategic sectors that power Greece's transformation, driving innovation, accelerating the green transition, and strengthening the country's resilience. I think we will talk about these three pillars in different moments of the podcast. And who could better tell us what's happening within this institution than Stelio Fragos. Stelio, welcome. Thank you for joining us today.
Thank you very much. It's a pleasure to be here and looking forward to an interesting conversation.
Thank you again. Thanks again. Stelio is the inaugural Chief Executive Officer of the HIIF, having joined the fund at its establishment in July 2025. Stelios has over 2 decades of extensive experience in investment banking, private equity, and corporate turnarounds. He has held multiple interim senior executive positions, and he has served on numerous boards. Now, let's dive immediately into the Q&A, into the questions. I think our audience would be very interested in knowing more about the macroeconomic situation of the country, growth, CPI, employment, balance of payments. How does Greece's improved macroeconomic outlook support the long-term investment environment that HIIF is designed to serve? Stelio.
So, well, again, thank you for this opportunity. Part of our mandate is to reach out to international investors. We'll come back to this. So I think this is a great platform and a podium. So Jorge, we've been at it already, looking at opportunities in Greece, and it's great to have this type of forum. If we sort of take that step back, as you said, and look at the macroeconomic snapshot of the country, fundamentally, Greece has taken, a number of steps, I would say, in the right direction. I think there's been a number of turning points as well. If you look at where the country was, let's say, 10 years ago versus where it is today. And you've been here for most of that journey, so you've seen that transformation.
I've seen it.
But it's also right now, I think it's starting to become evident beyond Greece. I think within Europe, I think we're seeing that at a macro level, right? Greece is now starting to post a set of macro KPIs that are showing this turnaround. They're showing this turn towards growth, right? I think we're seeing primary surpluses, 4.8% most recent, versus a target which was, I think, closer to 2.5%. Real GDP growth at 2.3%, right? Greece is becoming, I would say, in some ways, the darling of the EU in terms of the recovery path. It's not the only one. There's a number of them, but I think, you're seeing sort of some of the peripheral countries, so to speak, and
we're sharing some of that.
Exactly. And I think you see that with Spain as well. I think we're seeing it with Portugal, with Ireland. Obviously, the country's credit ratings have come a long way. Spreads have come, have adjusted as well. So it's starting to become really part of a story. There's a real narrative here that's underpinned by real fundamentals on that. Well, I think we're beyond the stage of recovery at this point, and we're going to full growth mode. And we'll talk about this throughout our discussion today.
Excellent. Well, that's the path that the Greek economy has followed in the last few years, for the better. I would say only for the better in the last few years. Let me zoom in or zoom out, depending on the perspective. When it comes to attracting investments, a big chunk of it, I guess, would be those investors that come from abroad, the FDI. itself. I would like to ask you about the FDI evolution? I see that there's a big, it's an important amount of FDI in the country, but it has been, I was thinking about it, I can call it bumpy, but it has been different sizes of FDI in different years. So it accelerated 19 to through, I would say, 22, 23 maybe, then it decelerated a bit and it picked up again in 25.
Correct.
So there my question is how do you think recent FDI trends reinforce Greece's attractiveness in those sectors that we mentioned earlier on in the conversation? So digital innovation, energy transition, and infrastructure.
So I think this is a good point, and we have to unpack it, right? FDI is going to be a key component of funding growth. I think we're seeing the Greek government. I think we're seeing Greek corporates, businessmen putting money into the economy, and it's been happening for years. I think FDI, if you look at the KPIs and where Greece is sort of, I would say, lagging to EU peers at this point, and part of it has to do with that journey of recovery, has been FDI, right? So our FDI is lower, it's closer to 17% versus 21 or 22% average at an EU level, right? And that's an area of focus, I think, for the country as a whole, for Greek businesses, and for HEIF, which we'll come back to in a way, and it's supposed to play a catalytic role in this. But I think when I talked before about this recovery, and by the way, for me, it's, when we're looking at this recovery, I'm buying into it because I've just returned after 28 years abroad, right? I studied in the US and I was for 24 years in London. I've done a lot of work in Greece, but it wasn't in my plans to come back in the immediate future. But this opportunity came along, and I think when you look on the face of the challenge that is interesting and the changes that have happened, it's definitely worth thinking about it. So we're seeing this brain regain, which will be a key focal point of why I think FDI is going to change, right? Because irrespective of what the numbers say, ultimately, I think what's been happening as a transformation is Greece is really, I would say, a low risk with high upside landing spot, I would say, for investments, right? And especially for institutional backed investments, given the reforms, the momentum, and the vision that's coming along, starting from the Greek state itself and going through institutions and investors domestically. The issue with FDI, as you mentioned, it's been peaking, and I won't say peaking and troughing, but it's been having sort of an up and down movement. I think 22, there was a bit of a lag that came on the back of COVID and a number of different changes. I think we've come back on a pattern of increase, of a steady increase. One of the things we do need to tackle is sort of, there's a set of issues that we need to tackle, which you would find in most countries that are in Greece's similar position, right? There's an element of, firstly, the recovery path. How far advanced are we? Is it mature enough to deploy capital? I think the short answer is yes, but I'll come back to this. The second is, what about bureaucracy? What about the challenges that businesses face on the day-to-day? And I think Greece has taken very, very big strides in this, notwithstanding, obviously, the fact that more needs to be done. But there is a change, right? Is this a completely de-risked situation? No, but I think when we're addressing this, in this particular case, Spanish companies, I think some of the challenges and difficulties are similar, whether, as you try and operate across the EU. So I think that's not something new, and it shouldn't scare people. You do need good local partners where they're able to help you navigate the situation, and there are a number of them, we'll come back to it, but it's not an insurmountable obstacle, in my opinion. And I think that's how we're seeing FDI pick up again. Keep in mind that when we're thinking about FDI in Greece, 4/5 of any private investment that's channeled is going to productive capital, and this will be a catalyst going forward. If we maintain this 80% that's going into...
When you mention productive capital, what do you mean?
We're going towards investment that have a real GDP impact. Okay. And it's not necessarily just driving policy, concessionary finance, and so on.
Okay, right? I understand.
Because FDI will come in a number of shapes and different forms. We'll talk about this as well. And I think this will all get underpinned as well from a number of, if you think about the financing side of things, with Greece recovering as an economy is one thing, the credit ratings will also make it easier for corporations and thinking about their actual exposure, cost of debt going forward, and funding projects in Greece as well.
Okay, yeah. completely agree that FDI could be one of the motors of changes, and it comes always or usually with technology, more productivity, more competitivity, and so on. Let's go a little bit into the institution, the HIIF. I'd like to know more about the origin. I know it's linked to the Growth Fund, mandate, governance, strategy. Let me make you a couple of questions. Maybe we can go on with some more afterwards. What was the strategic rationale behind establishing the HIIF, and how is its mandate defined across the three main pillars? We said digital innovation, energy transition, and infrastructure modernization.
Sure. So this has been in the making for some time, because Greece was looking for different ways to mobilize third-party capital as a whole. I think if you ask how it kind of came about, I think it has the hallmarks of which underpin this recovery. On the one hand, I think you have a Greek government that's already investing in the Greek economy, is pushing to drive FDI, and was looking for different ways to support it. Right? We've had the recent RRF. For the benefit of our listeners, I would say that this is part of EU funding that goes towards having access to favorable terms of financing for a whole range of projects, and it's backed by a series of grants, effectively reducing the cost of debt. We'll keep it at that without going into detail. That program's coming to an end, but there's other potential initiatives. There's EIB, EBRD was also investing in the country as well up until the end of 25. Their mandate just ended. And then you had a number of corporates, and as I said, and you have a whole ecosystem of private equities already in place. We'll come back to this because there's a big interplay of how HIIF operates in the market with some of these key already institutions that are in there. But I think there's a clear agreement that more needs to be done, more investment. There was a question, how do you fund growth? And I think that's where the ESM itself played a key role. The decision to effectively redirect and repurpose capital that was earmarked to repay Greek government debt, right, was a pivotal moment in Greece's recovery. It shows that there is a clear trust by the institutions, in ESM in particular, in the Greek economy, in the stability of the economy and the country as well, recognizing, I would say, the opportunity cost of repaying a very low interest rate debt versus deploying capital with market terms and anticipating making private equity returns in infrastructure and some of the key sectors we talked about, which would help increase the ability and Greece's productivity and the ability to repay its debt over time as well.
But as on top of that, there's been the prepayment.
Correct.
The yearly prepayment, at least in 24, 25, and I think it's forecasted also for the years coming.
But and I agree with you. That's a very, very good point because it's interlinked, right? If you wear the ESM hat, for ESM, it's a critical point of how does it pivot from having helped stabilize the European banking system as a whole, right? And having deployed that capital, now that's coming back with early redemptions because it's not just Greece, right? Other countries, Portugal, Ireland, and so on, there's early redemptions. And the key question here is, how do you absorb this capital if you can redirect in the form of debt, what it is that you can do? And this is one of the options, one of the tools. In fact, it also ties in very well with the more recent geopolitical focus, I would say, which is a little bit more of an introvert approach towards, let's focus on investing in Europe. There's a lot of different polls which are saying we need to invest internally first, focus on putting more money at work to make, to bring Europe back to the forefront in terms of productivity, in terms of following through with technology and efficiency as well, right? So with that, there's been a lot of discussions of how do you fund part of this attempt at growth, and I think this is all one. This is part of a much, much bigger discussion, right, on I would say, EU and a global macro level, right? We're seeing the trends in the US, we're seeing the trends in the East, we're seeing it now with Europe as well. So I think this is one of the ways that Europe can help itself by thinking about how to redirect and repurpose money that go just back to the country states and into policy and general accounts, or focused on how to invest into the private market.
There is an issue there that I think is very important, and that we tend to discuss very often. When some institutions earmark certain investments, it sends a clear message, clear signal to whoever is going to invest in those. So I think that happens, and we'll talk afterwards about the ecosystem, EIB,
Yeah.
EBRD, and so on and so forth. But I think the governance model is very important for those that might have an appetite and that might co-invest with HIIF. So I would like to know more about that governance model that you are implementing and that ensures professional, I'm sure, and independent investment decisions. Could you tell us a little bit more on that?
Yeah. So, so in order to now operationalize this idea, in order to deploy capital, the fundamental question is, how do you create, within the spectrum of sovereign wealth funds and platforms and investment arms, how do you create an organization that will be, if I were to use sort of the spectrum on the right-hand side of being a fully catalytic / commercial vehicle, right? Because there's other parts of the ecosystem that, start from the concessionary finance through to much more focused on policy and other tools, right? So you needed a different tool. So fundamentally, the way HIIF has been established, it's been established to be, as I said, a market-seeking, right, a sort of return-seeking on market terms vehicle, but always taking into account and being able to deliver on a socioeconomic impact, right? So we are deploying capital. It needs to have a true, measurable, where possible, of course, impact on the Greek economy, whether that may be job creation, access to critical infrastructure, sustainable growth, right? The themes are right there. So I think that's, if you want, what defines HIIF in terms of what it's seeking. Now, how do you ensure that you get to market terms? How do you ensure you create the investment discipline and you're able to attract co-investors, right? Whether it's institutionals or strategics to invest alongside you. That happens through a very robust governance model that is based on market standards and best practices around the world. And what do I mean by that? The way we've been set up, right, as we said, we belong within the growth fund ecosystem, and it's one of the sovereign wealth, investment arms of the Greek government as a whole, right? And it's one of the first times it's really, you have direct investment happening into the Greek economy with an asset manager that's doing it on the private equity side. There's been a vehicle on VC, right? There's been a few other attempts, but this is, if you look at direct investment in these sectors with these type of tickets, this is the first time this is happening. So in order to be able to do this, you need to, attract the right people, make sure that you put together in place, as I said, an institution that will work as you would expect any top-end asset manager would in the space. And how do we ensure this? Well, firstly, I think we have a corporate governance structure in terms of having very clear investment mandate. You've covered some of the sectors. I'm going to come back to it. But we have a number of institutional guardrails in there of creating degrees of separation, making sure investment decisions are based on market criteria at the HIIF executive committee, investment committee level, that's backed by its own board and in terms of independence, and trying to create this relationship with an LP and a GP, if you want, with the Greek state as a whole. So I think that's one point. ESM is involved in this. There's a board observer as well on our board, which I think further ensures and shows, our willingness to be very, very transparent and clear on our governance structure and how decisions are made. And it reflects Growth Fund's model as well, which has its own supervisory, I think it's recently changed its name in terms of, I think it's a corporate governance board. Anyway, but in a very similar fashion, it's sort of fathomed on the back of it.
So, I find it very, very interesting that on top of best practices that you mentioned for asset management, you also incorporate some sort of measurement of impact.
Yes,
as you said, right, which makes it, which makes us understand how counts that it is in the, let's say, in the environment of the administration of the government somehow. I want to ask you again, still about the institution, and I think this is a very important information for those that might be willing to invest in the country with you, the operational parameters, so size, investment approach, you mentioned a little bit, time horizon.
So look, as I said, the plan and and we're 7 going almost 8 months into it now, is to operate independently, right, through our governance. That's our independent governance structure and that investment discipline, right, at So when it comes to how we are deploying our capital, right, we start with a C capital 300. This is the starting point, and we think that this will scale up over time. But the way it's set up right now, I think we're doing. I think the best way to describe it is as follows: tickets of 10 to 45 million per investment. It's across the cap structure, so we can do either equity or debt instruments, highlighting that our purpose is here not to act as a bank. So we're not doing senior debt. Our uses of capital do not include refinancing of debt, right? So there's a very clear distinction, as I said, that we're looking at the gaps in the market. Our approach and the way we operate is to crowd in investment, not to crowd out, especially local players. So I think those are the tickets. In terms of investment horizon, we have a competitive advantage if I were to look at it that way, although I don't see the rest of the ecosystem as competitors, and they're not. We don't have an investment horizon per se that we need to deploy our capital as a fixed number. Obviously, we do want to do it quickly.
So no rush. You have to.
There isn't a rush. We should do the right transactions. That's one. Second, we don't necessarily have to exit within a set period, right? Having said that, we're operating with market principles, right? So we're looking for returns. We're looking for our targets. We're looking to release capital and redeploy capital. And hopefully where we release our capital on exit, we're attracting new investment, whether it's FDI or other third parties, from Greece, in order to be able to replace our initial investment, if you want, and our money goes into the next project, right? And we're constantly working through that virtuous cycle of deploying capital, attracting more capital, redeploying capital. So we can, if you take a step back of how we do it, we could play a patient capital role in certain situations if needed. We can take early development risk in terms of the type of opportunities, which include licensing, permitting, and so on, which I think is very important to your listeners when they're looking at greenfield projects, right? So we can work in greenfield or brownfield situations. We can be scale up / growth capital for corporates that are looking to expand existing or new operations in Greece as well. So the word infrastructure does grasp part of what our mandate is, but I would say best way to think about it is we don't invest in real estate, right? That is a well-covered, well-funded sector, right? That is one of our limitations. In terms of sectors, we have our priorities, as you mentioned, but we are happy to explore and see how the Greek economy can expand. And so I think there's an opportunity to look at a very wide operational remit as such.
Very interesting that you mentioned crowding in instead of crowding out, right? We're trying to be complementary to whatever is in the market. I want to ask you, how will you be interacting with other players in the ecosystem? Some of the things that you mentioned reminded me part of the activity of some of these international financial institutions, particularly EBRD, which, as you mentioned, came here with a mandate at 2015, which will be finished or...
It just finished.
Formally finished, I think, in 2025, although they still have the portfolio. Correct. I would like to understand a bit better, and I think the audience will be keen on that, to understand a bit better how will HIF, I would say HIF instead of the HIF, it's easier. Mobilize capital alongside institutions such as the previously mentioned, right? EIB and EBRD mainly, which have different mandates and are in the market, and the Hellenic Development Bank.
Yes.
So that there is an acceleration in high impact projects here in the country, in Greece.
So I think that's a great way of sort of helping showcase how we're positioning the fund as well within the local ecosystem. I'm actually going to start with the Hellenic Development Bank, right, which sort of for our listeners sort of splits into has two key areas of operation. One is focusing on sort of helping part of the Greek economy, especially the SMEs fund, and there's a number of programs that it sort of works towards deploying capital in coordination and in partnership with some of the systemic banks. And then there's the Hellenic Development Bank that focuses on investments. And that is effectively, you should think about it as a fund of funds, right? That is, they've deployed, I think, over 2 billion. I can't remember, it's sort of in the last, let's say, I don't want to say the right and wrong years, but in the last few years, let's put it that way, right? And they've helped develop an ecosystem of venture capital and private equity firms that are investing in the Greek economy. Some of them have a slightly wider mandate, expanding abroad into the Balkans, Cyprus, other parts other parts of Europe as well. So there's already an indirect investment arm, right, in HDBI, which is, I think, we're there to start working alongside them and complement them with direct investment. And we'll look to partner up with some of those, let's say, local private equities, local partners in some projects. And depending on the size of the ticket opportunity, there could be an international partner in the form of an operator, a strategic investor, or a financial sponsor, right? So that's one key part. And we're very, very closely aligned because I think it's part of the gateway for investors to understand that there's institutional capital, right, that invested directly and indirectly into Greece, right? So when I talked about local partners earlier, right, there's already a very good ecosystem. Some specialize in certain sectors, others are more early stage, and so on. So there's a healthy part of it. And I think where HEEF sort of is complementary is bringing that institutional sovereign wealth hat fund that is needed to play that more catalytic role, which can help unlock some opportunities in a number of cases. That could be one way to think about it, or how it works alongside them. In others, is complementary on tickets and size. So I think ultimately, project maturing projects, ideation to execution is going to be key. And I think that's, if I were an international investor, I want to know that I have a sovereign wealth fund and I have a set of other local sources of potential co-investors that could be helping, help protect me when I'm going into a situation which is a bit unknown to me, right? There's a number of Spanish companies that have invested, and we'll come back to this in a bit later, I think, but there might be others that haven't done it. And it's always difficult, it's challenging, right? Uncertainty, right? How do you deal with this uncertainty of the market that you know versus the market that you don't know? Mm-hmm. So I totally grasp that. Now, if we start shifting away from the private equity, sort of private market, I'll say private capital focus into public capital, right? And looking at the IFIs and DFIs, MDBs of the world, so to speak, who are currently investing in Greece. EIB and EBRD are prominent, right? I think EBRD does leave a gap in the market in that sense because they had a prominent role. They have a great portfolio.
I completely agree.
So I think, although our mandate and our focus on structuring transactions, return profiles, risk reward may be somewhat different in certain cases, in the numbers that we're also matching, right? So I don't think HEEF is there to just fully capture that gap, but at least part of it we could be stepping into part of that gap. I think there's others between EIB, between other private equities. I think that whole gap will be covered. It's a shame it can't continue more. I think EBRD has done a great job so far. And I'm saying this outside in, right? I'm looking at the Greek economy.
I wanted to ask you about this because it happens all the time that there is a series of alternatives when it comes to funding. It happens also to us. When companies want to invest abroad or want to export or invest abroad, we have a different number of tools and institutions all within the ministries and the administration, and it's kind of hard sometimes for the companies to understand who could help do what.
Yes.
So I think it's very important, all that communication narrative, so that they know which door they have to knock at to get what, to downsize the risk, to get funding, pre-fund, et cetera, et cetera.
And it goes hand in hand. I think I agree with you because there are institutions, and even if you look at EIB, for example, right? You need to think about EIB and sort of split it between EIB itself, the bank, EIF, the innovation, exactly, and the innovation fund as well. So, in addition to a number of funds that are created, decarbonization fund and so on, that are channeled through EIB, I think primarily, which create additional potential sources of funding. So depending on the project, depending on what you need, you may have different pockets to tap, right? Ultimately, that is public money coming from the EU, right? And I think we move from sort of structural packages in the 80s, which I think with both Spain and Greece have benefited over the years, to much more targeted initiatives driven by deploying capital in the form of debt. EIB has an expanded mandate, including venture debt, going into even deep tech, for example, right? So, I think that they're in Greece. I think last year was I was at their annual results 10 days ago. Something like 3.6 billion deployed in the country. That is a very, very big number, and I think it's over 16 billion over the last sort of 7-8 years, if I'm not mistaken. These are serious numbers, right? Because this is debt. It's coming with a different set of profiles depending on the situation, maturity of a business, and so on. But they're looking across the cycle, the business cycle of businesses, and across sectors as well. So it's not just that, I'm going to get funding from EIB for sort of, hardcore infrastructure as an example. No. It's sort of, it has expanded over time, and they're playing a role that is very, very important. How do we
That's why I think
interact?
that's why I think it's so important that those that could benefit from all of this structure get to know exactly who does what, with which tools, and how can those instruments that were born, or an institution, to be complementary, because they were born to be that. How can they get access to that information so they can make their funding or their adventure in a more efficient way? Right?
So I think there's I think obviously conversations like this definitely help a little bit.
Yes, absolutely.
I think it's finding the local partner will help you understand, because on top of these, there's grants. There's additional EU grants. There's Greek grants as well. So I think finding the right local partner does always play a key role in helping step in. The way we approach this whole ecosystem, as I said, is with that co-investor hat. We see IB as a critical partner in co-investing. We can do debt alongside them. We could do debt, they can do debt, and we can be equity along with other co-investors at the equity level, right, as an example. We'd be doing the same with the BRD, obviously their mandate. Obviously they have an existing portfolio. If any opportunity arises, by all means, we'll take a look. And then I already mentioned how it would work with the local private equity market ecosystem, right? Just as a reminder to our listeners, we're not a venture capital fund, right? So we're not here, although the word innovation is squarely in our mandate, we don't take early technology risk. We may take early life cycle risk in a business, but the model or the concept has to be proven, or has to be offtake demand. There has to be something there that creates a commercial viability that goes beyond taking a view on a potential opportunity, right? We're not here to create a portfolio of 15, 20 investments and hopefully 3, 4 are home runs and we're good. We're here for every single investment to hopefully generate sustainable market returns for the profile. If it's infra, it'll be infra plus. We can do from infra debt, infra equity plus. So we have a diverse risk, sort of appetite depending on the situation and depending on the instrument used. But there is a clear distinction, and as I said, there's a very healthy VC ecosystem in Greece, which is growing. Right, Greece is trying to become a bit more of that hub, and hopefully we help complement that from an innovation perspective, attract edge or existing technologies that haven't come to Greece but have true and real implementations, right? If I think about automation of production, going back to the sectors you mentioned, for example, whether it's in agrotech, it could be biotech, and so on, these are areas that sit squarely in our mandate and remit, and would love to see opportunities, which is, I think, a great segue of how we can partner up potentially with...
We're actually working on some VC private equity thing, maybe to bring people from both financiers but also startups to see how we can mix them up with the Greek community. Let's talk a little bit slightly about the interaction or potential interaction with Spanish companies and institutions.
Sure.
What do you see the most tangible opportunities for those are to cooperate or co-invest with HIF, including, of course, potential synergies probably you've already met with Cofides and the newly announced sovereign wealth initiative in the country, in Spain.
So, look, taking a step back, as I said, one of our objectives is to mobilize third-party capital, and I think, as I said, there's a healthy, vibrant domestic ecosystem, and we see them as a set of partners already, and obviously we're focused on that as much as FDI, but when it comes to FDI, that is a top priority for the country, right? And if I were to think about it, obviously, living in a global world, you look across, sources of capital or investors across the globe. But if you had to, I won't say if you had to pick, but if you look at similarities or understanding of local market dynamics, regulatory issues, constraints, right? EU partners are a natural landing spot, which, you can co-invest alongside each other, right? And then if I take it one step further, without making this is not about stereotypes, right? But Greece, Italy, Spain, Portugal, between geographic location, and it's important if we talk about energy transition as an example, right? Where renewables play such a key role, right? On PVs, on wind, solar, et cetera, right? We are on a very similar journey already. I'm not saying it's, but there's a reason why, let's say, solar has expanded a lot more in Southern Europe versus offshore wind.
I agree.
So we have similar experiences in sectors. We see some of those trends as well. And frankly, I think there's a competitive advantage to some of our Western European peers and economies, like I mentioned, Italy, Spain, and Portugal, where in some cases, take EV charging, right, as an example, you're more advanced down, we're lagging behind, right? Greece is lagging behind in a number of areas and sectors because it went through this crisis. But that creates a real opportunity, right? Because we have to catch up, right? We should and will catch up, right? And there your entry point is very, very different than trying to enter the same market, let's say, in a much more mature. It will be more expensive, more challenging. You have different issues than you would, let's say, if you're doing it in Spain or you're doing it in Western Europe or other parts of the EU, right? Here, you have an underinvested part of a set of sectors in the economy, which are critical. We know how the model works, right? There's the paradigm shift. We've seen it. I like to sort of go back to, let's say, local loop unbundling, right? And let's think about internet penetration when Greece in the early 2000s was lagging European peers. Now, it took time. There were obstacles. There'll be similar situations or issues. It took time for local loop unbundling to happen. Once it did, though, you saw that paradigm shift follow alternate telecoms. You saw how the market changed. You saw the shift from fixed line to internet to broadband, et cetera, right? So I think you look at, I think on renewables, we've done great on generation. We're lagging on storage, right? But I think when you're looking at storage, right, I think Greece needs and is thinking beyond just grid solutions. We need to think about offshore. When you think about off-the-grid solutions, we need to think about other ways to harness energy. Is it project-specific, as we mentioned? Is it working towards a different way? And at the end of the day, look, power procurement is critical and underpins most of the projects that we've talked about, most of the sectors, right? You want to talk about digital, right? Infrastructure, data centers, right? It sits squarely there. You want to talk about the interconnectors, the cables, the big projects which are underway.
It's all over the place.
It's all over the place, right? You want to talk about energy transition, green transition as well. It sits squarely through there, right? But where do I see the opportunities, right? I'm going to say something which is, I think it's extremely insightful, but it's very, very common sense at the same time. We have to follow demand, offtake, right? Where is that? And why has it not happened is the fundamental question you have to answer. They're interlinked, right? So do we need to create sustainable aviation and maritime fuel infrastructure? As an example, right? I'm going to give you a few sectors. We've had this conversation already. You do, right? It hasn't happened. Why? Let's explore that, understand if there's regulatory issues, if there's commercial consideration, whatever it is. But there's clear themes, again, following the paradigm across. What has worked well in Spain or hasn't across some of these sectors? We have a fundamental issue with water, right? By 2030, we're going to need, in the islands only, tourism is going to increase, hopefully, if things go as is. And Greece is really trying hard not to be a one-trick pony as an economy and be based on tourism and adjacencies, right? So we need to find a way, that 30% increase, we need to find a way to get clean water to the islands. And, with water and for my, I've spent 2 years in the Thames Water restructuring with my previous firm as well on the operational side. So it's a matter that's very deeply rooted and close to my heart as I lived and breathed it. You have to also deal with wastewater removal, right? What goes in has to come out.
There is a lot of investment that has to be done in the country in water, waste, solid waste.
Exactly. So I think you're seeing the themes, right? If you talk about it. And then the other part where we're really lagging behind, if you look at sort of cyclical economy, how it works, right? I think the first EIBs co-investing with a few investors in the first pyrolysis project, right? We are lagging behind. Again, it goes back to there's a clear investment opportunity, right? Whether it's using
You're talking about circular economy.
Yes, as well.
You're talking about a private initiative or blending with.
So I think there's a combination, right? There's a combination, and there's different. They have a different risk-reward profile, right? It could be a PPP, but it could be also this pyrolysis project, as an example, is purely, it's driven with an offtake agreement with a big tire producer, as an example, right? It's got nothing to do, right? I think there's a couple of initiatives of collecting used engine oil, as an example. These are more pilot, but I think if you look at Spain in terms of some of these sectors and segments of the economy, I think you're 1, 2, maybe a few steps ahead of us. You've seen what works, you've seen the requirements of the market, and the question is, how do you supply it, right? CO2 storage is another, captured CO2 storage is another massive area, right? Especially on capture, there's a big project on CO2, which is, and actually EBRD is committed to it at the end of the year. That was their last project, which is, I think that's an emblematic project, right, for Greece. But you have to capture, right? You have to implement. And some of the key off-takers have received grants and additional subsidies and support from the Greek government and the EU. They need to operationalize this, right? We're talking about millions of metric tons of CO2 that has to be captured. And that's just the 4, right? It has to be transported. So think about, right? Let's think about the adjacencies on these themes, right? We talk about infra and it's, Athens airport's expanding, right? You're talking about new ports. For us, we're not here to build, the next dock or the next, in that sense, right? There's good money that goes into this and it's well covered. But the adjacencies, a smart port, smart motorways, although we have to see a model of smart motorways that make money per se, but you get the point, right? So we want to look at that value add that comes. That's where the innovation and infrastructure really comes together. The best way we are positioning ourselves is, where should we be investing in the next, for an impact over the next 30 years? Nobody has a crystal ball for even 5, but the point is, sort of those new adjacencies that we haven't invested in, right? That we haven't done it. There's the brick and mortar part of infra, and there's a whole set, whether it's virtual, whether it's additional or new technologies that have to go into it.
Let me ask you a last question. You've been talking about investing in the country, which I guess, of course, it's the mandate. But I was wondering whether eventually you could come along with the companies funding projects that are somehow international, let's say, and where we could eventually also cooperate, because I think there is room for further working together, Greek and Spanish companies, Spanish and Greek companies in the Western Balkans, in the Eastern Balkans, in the Middle East.
So I think that's a good question. Look, the initial setup and design is for a national fund, and there's a good reason for it because of its objective. Now, when you're looking at the benefits of the Greek economy, if there is support to help fund part of that growth, if you sort of go back before the GFC as an example, right? Greece was exporting not just business, but it was going into the Balkans, into Turkey, right? I'm looking at the period sort of 04 to 08, right? And into sort of even into Poland. I worked in a private equity that had
I was posted in Belgrade, and
exactly.
Greek companies were very strong in distribution, banking, you name it.
Exactly. Both Central and Eastern Europe was part of that focus. Plus, obviously, the Balkans was a key, So if part of that whole investment includes international expansion for Greek businesses, where they might, I think the nexus of our investment and returns should be Greece. But that's where potentially there could be top-up from Spanish companies. There could be strategics that go into these new markets. So there's different ways to structure it, even in the current setup, right? As I said, we have a founding law that gives us a very robust foundation for to ensure transparency, independence, and investing alongside other investors with market returns. But we have a lot of operational flexibility within our remit, as long as we operate within these corridors, so to speak, right, to generate those returns in the right sectors, to look at it and create opportunities. So we're very, very open to explore these things, obviously within whatever limitation we have. And who knows, maybe one day we can co-invest alongside Cofidis and some other sovereign wealth funds, but we'll be looking at any opportunity under that prism and light.
Excellent. Let's see what time brings up. Great conversation. We talked about the macroeconomic situation, macroeconomic update, the great evolution of Greece's economy in the last years, late FDI evolution, and how that fed in to the three big pillars of HIF. A little bit of the story of HIF, mandate, governance, strategy, and activity definition. The interaction with the local ecosystem, with international financial institutions and the Hellenic Development Bank, and potential interaction with Spanish companies and Spanish institutions. I think we got a great picture of HIF and its potential eventually for Spanish companies. I want to thank you very much, Esterio, for joining us today. Thanks a lot.
Thank you for having me. It's an absolute pleasure to introduce HIF, to sort of show you how we're trying to deepen this market liquidity, right? Asset rotation and stimulate investment in sectors where it's been more difficult, and sort of bring those international practices, international market expertise and best practices in Greece's emerging investment ecosystem. Thank you very much again.
Thank you again. Y nosotros nos vemos de nuevo en Oportunidades en Grecia. Aún hay mucho de lo que hablar, más sobre energía, renovables, turismo. Hasta pronto.